Morning, all. I was just saying, where is everybody? Why is no one talking to me? There's no one in chat. The microphone is muted. That's why. Morning, Kibria. Morning, Frank. Kibria, however it's pronounced. Morning, David. Morning, Diamond. I just got out of this pound New Zealand that I got into yesterday. I got in on the M5 yesterday, actually, not the M15. Actually, I got in on a reversal alert just before that one was invalidated with the EA. But yeah, so just got out of that one this morning. Just under 0.5%. Still going down, and I'm back into break even on it now. So it's a free trade basically, but I like it still. So Pan New Zealand, we've just had retail sentiment come on board again. So when I took this trade initially, it was a -2. And then it went back to yesterday being just caught, no retail sentiment. Retail have now decided to go long. So we've got some retail sentiment on side now as well, which is great. Retail are obviously going long because it's coming down, because obviously everybody's trying to catch the falling knife. So they're long, which means all their liquidity is just sitting at all the lows. So I'm still short on that. I still like it short. I like everything short against with the pound. Morning, Antro. Morning, It's Time. Morning, Ochanda. Morning, World King. So yeah, so banked 1.15 yesterday. Not a bad day in the end, considering I was 3k down in the morning after many fat fingers with the EAs. But anyway, won't talk about that in the same way as we won't talk about FOMC last week. So everything's kind of hovering at the moment, but pound New Zealand's coming down anyway, so that's good. So today we've got we've had the Aussie rate 3.35 as expected. So from fundamental perspective, that's obviously changed. 3.35. They have gone up 0.25, falling in line with the same speed of rate increase as Canada and the US now. We've still got the euro and the pound and the Swiss franc going up at a rate of knots at 0.5%, and New Zealand dollar decided to put the brakes on, which is why that's starting to weaken. So obviously that inflation is still going up dramatically. So apart from Japan, Australia are the only country at the moment that is still seeing positive inflation. They're a little bit behind on the rates. So everything else they're not doing too bad on, not great on GDP. But I mean, it's good that they put the rates up. They didn't go for the big one, for the 3.5, which was the other possibility, I thought, with the Aussies, but they didn't do it. So interest rates are up. So again, more potential enticement for longs into the Aussie. So looking at the buyer scorecard, not a massive amount of difference there. So there's no Aussie sentiment really long. Aussie yen is a long, New Zealand yen's a long, but that's because of the yen. So you can see it's still, just filter it down to the Aussies. It's still negative for the Aussie compared to all the other countries, mainly because they're lagging on interest rates. They're not doing as well with GDP. Their inflation is high. They're okay on unemployment at the moment, which is a little bit of a plus for some of them, but overall still a short. So Aussie US is still a big sell, basically, and a lot of sentiment on side on that as well. So no real reason to be buying the Aussie at the moment, so we're looking for short opportunities. From an intraday perspective as well, you can see obviously it's a mixed bag with the Aussie, but COT is short against the US dollar, neutral Swiss. They are short against New Zealand, neutral everything else, but obviously long against the euro. So overall, Aussie US is a pretty good short today, and Aussie Swiss is a pretty good short today as well, but you've got no COT on the side there. So there's your sentiment from that perspective. Those are the top buys and sells intraday at the moment. Euro pound I got into yesterday. We just flip-flopped after I got into it yesterday. So I got into it here yesterday, pushed up nicely, moved back down again, dropped down a little bit, took out yesterday's previous day's low this morning, and now we're pushing up again. So I'm in that one. US dollar CAD is a fairly decent long opportunity as well. If we look at the US dollar CAD from a higher time frame perspective, we're pushing up. We've pushed straight up into those highs and bounced. But it is still a long. COT are still long and retail are still short on this. Everybody's trying to get the mean reversion trade, so it's not moving down at the moment. So potential long opportunity there as well. Pound US and Aussie US are the shorts at the moment. I'm flicking over the yens because I'm not sure about the yens, but Pound US, nice looking short, and Aussie US, a nice looking short. But however, with these, obviously you have got this big propulsion gap, which I get the feeling is probably going to be tested. So if we can get ourselves up into here today on the Aussie US, obviously off the back of this Australian dollar strength that we had off the interest rate rises, I doubt we'll get up there with pound US because pound's so weak. But if we can get anywhere up there, I'll be looking for shorts up at ADRs. So quickly looking at the Aussies before the market opens in 2 minutes. Aussie, we've had a big push, not very big. Yeah, so we didn't even get ADRs on these. Look, that's basically the interest rate announcement. So we got a little bit of a push there. Aussie dollar Swiss, that hit an ADR. Aussie dollar yen, Aussie New Zealand hit ADR. Aussie US hasn't. So although it was obviously bullish news, it's only bullish in the respect that you are lagging behind, and well done for putting your interest rates up too late. Your inflation's still too high. So yes, it's a positive, but overall not great, is it? So not particularly good news. The rate statement, I didn't go over the rate statement this morning. Scroll down. Two more rate hikes on the Fed. So there's more bullish US. Pinterest shares plunge on fourth quarter revenue. Oh dear. Trade balance. Inflation to fall this year as a result of both global causes and slower increase in local demand. Board anticipates future interest rate hikes. So they are saying they're going to hike again, which I wouldn't be surprised at all. Okay. So nothing particularly exciting came out of the news. So today we've got another flat news day, basically. Nothing's coming until Powell speaks later, followed by Macklem at 5:30. That's obviously at an event. Economic Club of Washington. So those two will be talking later. So there may be something comes out of that later at 5. But other than that, it's a flat news day. So we've got nothing to move us today. So it's just normal price action. Why am I not trading? Oh my days. I'm really not having much luck, am I, today with the ULPs this week? Right, so that should have been a short. It didn't. It wasn't. So I will take the next short. God, I'm really not with it today. This week, I've never wanted a week to be over so fast. I wanted the week to be over by the time the opening range had hit on yesterday morning. Anyway, so it's probably not a bad thing that I missed that pre-market open, to be honest. But we will see. So market is open. Morning ladder. I'm guessing you are a Chelsea fan because you live in London. I don't live in London and I don't support football. Not I don't support football, I just don't support a football team. Not interested. Never been interested in football. I don't live in London. It's the London session. I don't live in London. You can live anywhere in the UK and still trade. The London session. You don't have to be in London. You want to live in London. It's your dream. You do not want to live in London. Trust me. First, if you're not earning over 100k, you can't. Second, if you are earning under 100k and you want to live in London, you're going to live in a shoebox. Third, it's dirty, smelly, and nice to visit, but wouldn't want to live there. Live outside of London and commute in. But if you want to live outside of London and commute in, you need to live at least 50 miles away. Otherwise, you won't be able to afford it. Welcome to the most expensive country on the planet, apart from Monaco, London. I live in the south. I live down by the sea. And loud, yeah. It's loud in London. That's why all the hotels have got triple glazing. I might take a manual on this because I've missed the ORB. I'm just going to wait for this candle to close. I'm going to have to manually trade this morning because I've fat-fingered the open. Can afford to go with a 200-point stop today. 20-point stop. Maybe in Jamaica then, still part of the empire. I don't know. Is Jamaica still part of the empire? Do we even have an empire? Does that even exist anymore? We don't really rule an empire, do we? We've got other countries out there that are still kind of under our wing for some unknown reason, but have no dependence on us whatsoever. So maybe in the 1800s, but I don't think that is a real thing anymore. Okay, so I've missed the opening range breakout to the downside. Bum. So that would have been a lovely one this morning. 10-point stop. Your 1.5R, that would TP. 1.5R is my TP. There's TP. Hit down. 800 down the pan. Well, $400 down the pan. Never mind. Missed it. So I'll wait for the 5-minute opening range to be in. But if you took the pre-market, well done. Good job. You just made a ton of cash. Frustrating. Pound New Zealand, I've got another one. In profit at the moment on that. I'm going to leave that on for a minute. Holy cow. This kind of sums up my week so far, this. What a beauty. What an absolute beauty. So your risk was 12 points. You've had 44 points off the open in 10 minutes. Well done, everybody, if you took it. Can you feel the depression in my voice? Gutted. Never mind. So there's your 5-minute open. There's your 10-minute open. If you're going to play the 15-minute today, good luck. That's a big 15-minute open. Would have been stopped out on that push up, unfortunately, would you? On that? Depends on your trailer, I suppose. But yeah, I mean, you could have been if you had a tight trailer. Or tight break even. Mine's running at 20, I think. So, oh no, I would have been broke. Yeah, no, I would have been broken even on that. Yeah, yeah. My trader's running on 20. So yeah, I've been stopped out on that. No, you're right. Stopped out a break even. Yeah. Oh, that's annoying, isn't it? Again, you know, of my 40,000 set files that run on the pre-market, there are ones in there that would be milking this now. All depends on your stops, your trailers, your break evens. You know, this is why you give this strategy to 10 people. You're going to get 10 totally different results because everyone's going to trade it a slightly different way. If you're trading it manually without a trailer, you're in. But always a way to make money and always a way to get broken even. But yeah, lovely ORB. Right, let's have a quick look at the ADRs while we're waiting for the 15 minutes to go. I'm not going to trade this today because it's too wide, far too wide. Wow, look at the FTSE flying up. I wonder what's causing this. Market's melting, basically. Absolutely melting. Oh, geez, look at it. Well, that's too wide to trade today. So I have got the 15-minute ORB turned on. It's going to be such a tiny trade. I'm not even sure it's worth taking, but I'm going to take it anyway, just for the hell of it. Just to try and get into something short and maybe make a couple of $100 if I'm lucky. But this is the 10-minute opening in the range. I mean, where's this thing going? We're just coming down to yesterday's low, which is there. We're there. We're at yesterday's low. Look at that. That's undone the entire New York session in 10 minutes. 100-point move at the open. I do want to be on short on this. The old pre-15 would have been a charm. Well, yeah, I like, but like you said, Ladder, you'd get stopped out on it, wouldn't you? Depends on your trailers. If you're running a 20 pip trailer on that, you would have been stopped out on that pullback. So if you're running it on candle close rather than on tick, you would still be in that now. So this setting here, activate on bar close, is the difference between you either being in that or not being on that, in that, regardless of what you're using as a trailer or a break even. If you were using candle close, you're in it. You've made it. If you weren't, you're out. But those are the pluses and minuses of on tick and on close. On close is safer, but well, on close isn't necessarily safer. On close, you get more confirmation, but on tick will protect you faster. Again, no right or wrong; it's personal preference. I'm toying with the idea of taking a manual on this. That 20 points is far too tight. I just want to watch it interact with the low of yesterday. So we've obviously got limits triggering down here. It's high low on this as well, really. Just stick that on one sec. We'll have a look at the ADRs and everything in a minute. So this is the 15-minute candle for the 15-minute breakout. What prop firm is best for spreads in indices? My Forex funds. This is my Forex funds you're looking at here. Look at the spread. There isn't any, basically. There is no spread. So my Forex funds. Or E8. E8 is not bad, actually. E8 does have a fixed spread as well. So I would go with my Forex funds or E8. 8 cap are terrible, execution and spread, and 8 cap are used by a lot of the funded firms. Surge Trader, the trading prop or whatever, blah blah blah. I mean, they're all rubbish. There is no commission either. Outro. There is no commission on indices. Yeah, Nasdaq, Dow, no commissions. And obviously there's no swaps because I'm scalping it. So yeah, no commissions on indices. That's another big advantage. This is why people scalp indices. It's cheaper. You're using 8 cap now and they're awful. Yeah, 8 cap. Trade Nation, Michael's just said. I don't know who they use, but they're a broker. They're not a prop firm. They're a broker. They're not a prop. We're talking about prop firms, not brokers. This is on my Forex funds. This is on my Forex funds account, not E8. But E8 are good as well. E8, sorry, you're on E8s. Yeah, I see what you mean, ladder. Yeah, E8s do have commissions. So the disadvantage of E8 is they charge commission on indices. This E8 is my second best prop firm. So the things that I think make my Forex funds better than E8 are, first of all, price. They are cheaper by $30, $40. Not a lot. It's not a lot in it, really. Spreads, they are equal, I think. Spreads, E8 and my Forex funds. E8 charge a commission. My Forex funds don't. Yeah. But the massive advantage of E8 is I can pass today. Yeah. So I can take a opening range breakout short, pass evaluation, go on to the second stage, take a trade long, pass the second stage. I can be in and out and be passed within an hour on E8. FTMO, I hate FTMO. I traded with FTMO. They're nowhere near as good as the others. Just not as good. They're all right. I mean, there's nothing wrong with them, I suppose, but I don't. I've traded with virtually all prop firms out there. I'm just about to take an evaluation with Surge Trader as well, just to test them out for some extra funding. But you have to use a stop loss with Surge Trader. You can't hold over the weekends, so it is scalping only. So I want to try Surge Trader just purely from an index scalping perspective. So there's my opening range breakout short placed for the 15-minute ORB short. Obviously, it's a tiny position because it's such a massive massive open. I just get the feeling we may well just play around inside bar on the 15-minute today. We've just come down into yesterday's low and hit limits. So Surge, do a 2 million account. Yeah, I mean, forget scaling. You're not going to scale it. No one's going to scale their account. Everybody's enticed by, oh, you can scale up. 0.05% of people that pass an evaluation actually last a month in a prop firm. Yeah. It's around about 1 in 25,000 people will ever hold an account for 3 months. And I don't know how long it takes to scale to 2 million, but I could do a poll in every forum in the world and no one will be able to say, yes, I've done it. Because the rules are too tight. You can't hold an account for that long. That's why you rotate accounts. That's why you rotate all the time. Scale it, build it up, get it to a point where you can withdraw. Do that again, withdraw. Keep doing that until you blow the account, and you will blow the account. Typically, I last 6 to 8 weeks max in my accounts before I blow them. Because I've no idea, as I've said many times, when the market's going to give me my wins and when it's not. If I have a losing run of 6 trades in a row, that's it, done. They know that. That's why they make millions out of evaluations and make very little out of any shared profit, because people aren't making money sharing profit. It's not the business model. The business model is pass the evaluation, get the account to 4K, draw it out. Thank you very much. Done. That's the way to do it. Minimum 1 trading day. Yeah, that's the other thing that attracted me to Surge Trader, but you can't get that. You can't do that though. Yeah. That part of Surge Trader where you can pass in a day is not actually doable. And there's a reason for that. Which isn't there. Where's the rules? God. Anyway, trading rules. There you go. So the rule that stops you passing in a day is that on a 100K account, you cannot have more than 10 lots open at a time. Yeah. Right. So if I can't scalp with more than 10 lots, right? If I go short with 25 lots on the open of the DAX, for example, in the morning, and I go for a 2-hour return with 25 lots, I'm going to earn $400. Yeah. I can't have more than 10 lots open. So I can't scalp short more than 10 lots on the DAX. I can't get past in a day. I'm not going to hit a 10K target in a day, am I, with 10 lots? It's not enough leverage. Can't do it. So you can pass in a day, rubbish. You can't do it. E8 you can, because I've got no lot limit. That's why I use E8. Again, Surge Trader are okay, but when you read the small print and all these prop firms, there's always something that's going to get you. Always. My Forex funds and E8 are the 2 companies which there is no downside to them, either of them. Have you looked at my funded FX? No stop loss. Yeah, no. There is Surge Trader, as far as I'm aware, and City Traders Imperium are the only 2 that force you to have a stop loss. There is no other prop firm that says you've got to have a stop loss. I don't have to have a stop with my Forex funds, with E8, anybody else. The stop loss rule is, again, pointless. You're in and out, you're scalping. Yeah, I mean, these prop firms are all designed for scalpers. Most of them. So I'm using Next Step funded garbage. Yeah. You got to try them all. I mean, this thing, I've tried many prop firms, many prop firms. I've been funded with loads, but most of them are they've either got a crap broker you can't trade on, hideous execution, or rules which restrict you from actually making money. You know, the loosest ones out there are the ones that attract the most people. The loose rules attract you because you want to become a millionaire. E8 do very, very well because you can pass in a day. There's a leaderboard in the back of E8. If you've been funded with E8, if you want to go, there's a link on my website on this page to all the prop firms. Go and have a look at it later. E8 are brilliant. And there's a leaderboard in the back end of E8 which shows you how fast people are passing. And there's people passing evaluations within literally 2 minutes. They're funded with 100K in 2 minutes. Or 4 minutes if they're taking 2-stage evaluations, because you can do single-stage evaluations with them and 3-stage evaluations. But the thing that attracts people is the Ferrari and the Lamborghini, yeah? Oh, I can be funded with 100K this afternoon. Yeah, you can. If you over-leverage your account, hit the button and flip a coin and are lucky enough for it to move far enough for you to hit target within 2 minutes. Of course you can. I can do that. I could hit the button now, short. If I go 5% now, sell, and this thing goes down, I will pass this evaluation. Does that make me a good trader? Of course it doesn't. Makes me lucky. But you're not going to sustain that, are you? But that's what attracts people to E8. But if you really use E8 properly, I have them there as a backup, really, for when I need funding fast. If I blow a couple of accounts and I need to get back in the game quickly, I go to E8 and I get in quickly with E8. If I take 5 evaluations with E8, I'll be past one of them today. 100K. It's going to cost me $1,500 or something, but it doesn't matter, does it? $1,500 in the grand scheme of things. When you're making 5 to 10 grand a month, it's irrelevant. It's the cost of doing business. That's the way you've got to look at them. and they, enticing you in with this, like, you can scale your account up to 2 million. No one's going to keep their account long enough to scale it anywhere because the rules are too strict. But yeah, it's just the way they work. Right, I'm going to leave the DAX this morning because it's done it. It's done the move. So this is potentially a fade. I don't want to fade a move that's gone that fast, that hard. So it's difficult to tell where this is going today. So there's your 15-minute opening range. It's too big to trade. The only option you've got is to sort of scalp with inside this range at the moment. So at the minute, we've got higher highs and higher lows going in. We've micro double topped. We've got a higher low going in at the moment. We've got 2 minutes left on this candle, which I suspect is going to put a higher high. So literally, this is at the moment just a fade. So potentially, we are looking at a flag break to the downside. So the play for me today on this really would be candles, probably a 330-point stop, but sell stops under the lows, yeah, and see if you get triggered into a short. If this pushes up again, cancel the pending, sell stop under the low, and just keep sell stops under the low until this thing flag breaks. Assuming that, what we're going to do is grind up and then flush back down and attempt these lows again. Other than that, I don't really want to be trying to climb this. It's hard work climbing back up here, but when this falls down the elevator shaft, it's going to be a lot quicker, much easier trade to take. But it could also just do this all day and play around this inside range. I'm not quite sure what caused that flush this morning, but could have been the mind you, that would have been negative euro, which would have made it pop. So I don't think it was anything to do with that. What's going on with house prices? They've paused. It's not good. I don't want my house prices to start dropping. So yeah, so that's really what I would look at on the DAX this morning. So there's your higher high, higher low. Again, market structures just long at the minute. But I would be just trying to anticipate getting in short rather than trying to climb this all the way back up. This is a propulsion gap. That is a propulsion gap. So there is potential for it to come and retest up here. However, there is also potential for the sellers to step in at any moment and start to drive this back down again, whatever's caused this. Spreads widen, high commissions. Is that next step funded? Yeah. This is the trouble with prop firms, unfortunately, and this is why I try them all out with a small account. So I just go and get a 10K or a 25K account to try them out. It cost me $150, a couple of $100, whatever. Just to see if they're any good. From a broker perspective, I'm not really too worried about their rules. They've all got fairly tight rules, but what I'm interested in is, have I got tight spreads, decent commissions, and fast execution? Because that's what I need to be able to trade. The rules I can't do anything about. Okay, so we've got bearish movement starting. So we're an inside bar at the minute. But yeah, you just got to try them, unfortunately. If they've got a trial, even better. But then you need to guarantee that you're going to get a trial on the actual platform that they're going to put you onto for evaluation and for live trading. So, which you can never tell. David, do you use an EA to trade your live accounts? Yeah. So my live accounts are all using both EAs. So I use the opening range breakout EA and the market reversal alerts EA. They're running on my live accounts. And I use the Price Action Toolkit, what I'm using here, for scalping. So I use these EAs on all my accounts. And again, people have this worry about EAs. I've been funded and am funded with EA, my Forex funds, other plenty of other props, but at the moment that's those two. They've all got rules on EAs, but no one's ever approached me from any company on payout, on passing, on anything, saying, are you using an EA? And what are you using? There's never been any questions about it, because my trades are not the same as everybody else's. All these EA rules are there are designed to protect the investors for the accounts that they do actually pass through to live copy trading after a period of X when they're live. So those ones, what they want is nobody using the same EA. And it's really easy to tell if someone is using a copy trade service or an EA that they've bought, because there'll be multiple accounts that enter and exit at exactly the same time. Yeah. So if you're buying an EA that's designed to pass a proper valuation, there's another 50 people taking exactly the same trades at exactly the same time as you are and getting out in exactly the same place. That's really easy to spot. I've got software on my computer here that can put multiple portfolios into the same thing and look for correlation. And if there's correlation, those guys are all using the same strategy and the same EA. That's what they don't want. So this is, no one's going to take the same trades as me with the Price Action Toolkit. With the opening range breakout EA, there's 50,000 set file combinations that all produce a profit. Every single one of them will take different trades and exit at different points, have different trailers, different break-evens, etc. Market reverse alerts EA. There's a million combinations of settings on this thing. The chances of everybody using exactly the same settings on exactly the same instruments and exactly the same everything as I do is infinitesimally small. It's not going to happen. So as long as you're not using one of those I'll pass for evaluation EAs, you'd be fine. So they certainly never contacted me about it anyway. And I've everything, you know, you can see in here, look, in the account history, placed by expert ID 791. That one was obviously a manual. Placed by expert ID 8318384. They know exactly which of your trades is placed using an EA. If they really had a problem with EAs, they'd be on to you immediately because they know everything's placed with EAs. You can't scalp in MT4 without an EA. You need something to get you in and out and manage your position. So you've got to use some kind of EA. You can't go, oh, I want to go long. Hang on. Oh, hang on. No, let me put that at 0.25. Buy. Right, I need to get out of that position. Let me go into my trades, sort it by profit, and see where that position is, and then exit it. You can't do that. It's not practical. You've got to have something to get you into trades. Short DAX. So this is an inside bar break, basically. So we've got higher highs, higher lows going in. Now we've had an inside bar. So I'm taking the inside bar break, the previous bar. So basically this is a push, pull, pause, potentially drop. Potentially. And I will obviously add a little bit as we come out the lows. That'll be the 15-minute opening range break to the downside. Right, so that's what I'm doing on the DAX. ADRs today, the only ADRs we've had obviously are the Aussies. So Aussie dollar Swiss. Outro, sorry, I've still got 12. I've still got till 12 to have my buy stop triggered. Yeah. Mine is set till 11:30 to stop trading. I've reduced this down dramatically because I'm trading the pre-market. This pre-market can be very dangerous towards the end of session because you can quite often have a push and pull back, return to origin, and then flip-flop around waiting for New York. And that can kill you. So I've made mine, you know, hour and a half in. I'm stopped trading the pre-market. Basically, if you haven't made your money within an hour and a half, you've kind of missed it, haven't you? So Aussie dollar Swiss ADR. So all these that have hit today are based on the Aussie dollar interest rates, which obviously were positive. So we've had a bit of a pump on the Aussie. nice push up into ADR. No reversal alert because obviously the push was off of the news, and all it literally has done is flag. So nah, market is really not impressed with that interest rate, is it? Aussie dollar, New Zealand dollar, again, big push, just about to get a reverse alert short on that. Potential return to origin trade. Just come down into this propulsion gap somewhere, but again, don't really fancy that. And Euro odd as a long, which I do fancy. So that's hit ADR, but again, you're not going to get a reverse alert until it's come back to where basically this move started. So there's no ADRs really to take. Weeklies we've hit nothing. Monthlies there's nothing hit either. So there's nothing to look at on the ADR dashboard. RSIs, everything's kind of dropped off. Sorry, Archer, I didn't see your other comment. You never thought about making an EA specifically for passing challenges? No, because you can't use them. You can pass a challenge with every single one of my EAs. You can pass. I say every single one. I've only got 3, but you can pass with all of them. Yeah, ORB EA Price Action Toolkit. Right. If you want to pass with the Price Action Toolkit, basically set that to 1.5 and hit the button. It's not the thing that passes a challenge. Is the leverage. That and whether or not you are lucky enough to get, if I hit the button with 1.5 short with a 2R TP, yeah. So let's say I go 2% short with a 2R. I'm going to make 4% per trade. The target's 8%. Yeah. If I'm lucky enough to have 2 trades on the trot, I've passed. All these EAs that pass challenges, all they are doing is they are leveraging up and trying to get you over the line. The strategy is irrelevant. Every strategy out there, if it has a strike rate of anything above 30%, has a chance of passing an evaluation. Yeah. This is what the risk reward spreadsheet on the website is designed for. Yeah. So if you've got a 50% strike rate, yeah, and you go in with 2% on your positions, and it just so happens that the next 3 trades fall within the winning percentage of those, you've done 6% on your account. If you're doing with a 1R, if you're going 1.5R, you've passed. So, if you put the opening range breakout EA on this morning, right, with a 2% risk, you made 12.76. 6.3 times 2. You made 12% on that. You passed the evaluation already this morning. First one trade, done. 100% strike rate, in, out. Thank you very much. So there you go. Use the opening range breakout. Yeah, that will pass evaluations. I get quite asked this question all the time. Can you give me a set file to pass an evaluation? Yeah, sure. Any set file you like that's on the website, go and pick one up and put 2% in the risk box. Good luck. You may or may not pass. I don't know. Depends whether or not the market moves on the day you do it, doesn't it? It's got nothing to do with anything but over leveraging. If you want to do it the right way that I'm doing it, you keep your leverage small and you creep along and do a P&L like that. That's the right way to do it. And these are the people that are doing this who are keeping their accounts for 2 to 3 months. The people that are doing the EAs to pass evaluations, they won't keep those accounts for more than a couple of days when they get them. Within a week, pop. Or massively target hit and thank you very much, take it out. But there's always ways to make money with passing challenges. But all of my EAs will pass a challenge. You put the market reverse alerts EA on, yeah, and you set the risk on the market reversal alert CA to 1% with half an ADR. Every time you get a 1 hour reversal alert, if it moves half an ADR to an ADR after that 1 hour reversal alert, and it does that 5 times on a trot, you've just passed an evaluation. So every strategy with a strike rate can pass. It's just a case of whether or not you're lucky enough when you start the evaluation to have the trades fall in line in front of you. Morning, Warren. Please can I have the symbol changer indicator? It's not an indicator, it's the market watch. As Pip from the Forge has just said. This is market watch. Yeah, that's all it is. You just click, drag, let go. Click, drag, let go. I have to do this in slow motion because I do it so quick, people think I'm clicking on something and it's automatically changing. What I'm actually doing is clicking and dragging and dropping. I'm just a ninja. DAX is falling out of bed nicely. So I'm going to add on a break of the lows on the DAX. Well, the opening range breakout EA is going to add on the break of the lows. See if I can grab like 0.2, 0.3 out of this, kind of make up for that missed opportunity. But so the danger with this short at the moment is what we're seeing is a W pattern reversal forming, and it's going to come back up and retest that propulsion gap. Either that or it is, as I said, the flag break, and we're going to test a new low. One of those two things is going to happen. Don't know which. So Euro US dollar, we've got extended on RSI. So these are 4 hours. There's no hourly extensions. All the hourly extensions are all starting to play out. Let me just quickly check my pound New Zealand quickly. We're a bit stuck in London on the pound at the moment. I'm just toying with the idea of taking this off and just banking that as well. And then I've still got a position on here. So this is almost like, there's my first position. I've just taken a second, but banking another 0.25%. Because we're not able to actually make any lows. We haven't managed to get back down here yet today, which is what's worrying me. We're kind of ever so slightly bullish on it, and I don't really want to lose the money. If we are going to drive down towards ADR today, I'm going to make money on these positions anyway. I'll tell you what I'm going to do. I'm just going to trail this. So I'm just taking a 13-point trailer on it. That locks me in. I'm going to lock in a couple of $100. If it continues to push down, that's fine. I'll pay attention to it. But if it goes, I just want to get this banked as well. Just want to put as much as I can in the bank today. So Euro US dollar, sorry. Moving on. So 4-hour RSI extension to the downside. So we got extended on this yesterday. It's still a very, very, very big question mark as to whether or not we are going to come back and retest this area on this US dollar move. At the moment, it doesn't seem like it. We just taken out yesterday's low on Euro US dollar, and we're in a propulsion gap. Yeah, so this accumulation break here, it's the first time we've retested it. Well, it's actually not. It's the second time we've retested it. So I'd say this is probably pretty weak. It's quite old. So this is more of a support bounce. Yeah, here. So that area is another bounce. So this is more of a support bounce and a liquidity run on yesterday's support bounce. So there is a potential for this to come up into there. Euro US dollar at the moment is a pretty strong sell. And it's mainly fundamental. We got retail telling us to short it at the moment. There's no cop bias either way because they're both longs. So retail's telling us to short it. We're down here. Obviously, it's come down quite hard. So it's not really something I necessarily would be interested in taking. I am long euro, but I'm now unsure about the US dollar after this move. I'm unsure as to whether or not we're going to get continuation strength on this US dollar. And if we are going to get continuation strength on it, I don't really want to be longing against the US because there is a chance this can obviously push down. The other reason I'm a little bit skeptical on this one is because I've got my stupid gold trade on. So I am already long against the US. So it is extended, very, very nicely extended. But because we've got a long currency against a long currency, there's no bias really from a fundamental perspective. And there is a bias short from a fundamental perspective and from obviously going against retail. So there's a chance that this will just accumulate or flag and then break to the downside. It all depends on who is going to be the stronger of these two. Both very strong at the moment. I'm unsure after last week as yet as to whether or not we've still got this continuation strength on the US. So it is a nice RSI extension. It's likely to have some kind of pullback. If you look at it from a trend perspective, obviously, this is a massive long and we're back down here. However, when we got down here last time, the US dollar was really weak and the euro was strong. Now we've got a strong against a strong. So the US dollar is always going to be stronger than the euro. So continuation potentially to the downside. I can see this going a very similar way to the Aussie New Zealand when that shifted. Yeah, so we had that lovely long, beautiful move, and then the fundamentals shifted, and we didn't just break, we slammed and collapsed. And it's very similar potentially with the euro US dollar. We might see now, after obviously the big move down, we've had the big push, and now that is very much on the cards, at least to come back and test parity, which is going to be there. Yeah, which is 1. So I'm not sure I really want to take this long. I certainly don't want to scale into a long on it. There's not any fundamental bias really that's telling me to long that at the moment. Pound CAD, no reason at all to be long in the pound. Technically, yes, it's beautiful. It's set up perfectly. We've got an extended RSI. We've got divergence on the RSI. Sorry, ever such slight divergence on the RSI at the moment. We're at a technical level of beautiful support. However, the pound is very, very weak and the Canadian dollar is powering up with the US. Do you want to take that long? Up to you. You can do, but you are going to be battling against potentially what might turn into a big strong push to the downside. So tricky one at the moment. But yeah, there is a good chance that this is a liquidity run and we're finding limit orders triggering in this zone, which is why we're pushed up today. So if you get a reversal on M5, which you're not going to get yet, there is a potential for it to pull back up into that level there, which is an ADR. So that support there will become resistance, and that is a propulsion gap. So that's where I would expect to see the limit orders triggering, same way as we triggered there. Yeah, for a continuation. But I'd rather be shorting it there than trying to long it into it. There is every possibility that's going to work, but I'd be more happy getting in there short than I would be trying to take a long on it. Pound US dollar. Again, same scenario with this one. Are we going to come and retest? Is the US dollar going to weaken enough to give everybody a chance to come back up into this propulsion gap or not? I don't know. I'm not seeing any signs at the moment. So yesterday I was looking for signs of, is this move legit? It didn't really give us any indication. We had a little bit of a push down, but not really any indication that we're definitely coming down hard. I was hoping we were going to get a continuation. Right, now I definitely want to be short. What we've had so far today is a liquidity run and no direction. So this thing could push back up into yesterday's high and then reject off of yesterday's high, and we could end up with another day very similar to this, which means, again, still no US dollar strength. No indications as to whether or not this move is legit. I want to short it out of here. I don't want to break out short. I want to get in on a pullback so I know we've got a potential move started to the downside. Very extended on the RSI on the 4 hour. So again, potential good mean reversion trade. You're sitting inside this propulsion gap here at the moment. But, you know, if you look at what's happened on this pair, this is the Bailey bailout. So this is Liz Truss screwing our economy, getting fired, Bailey bailing us out, and then the market rallying on Bailey bailing us out up into a point where the US dollar started to strengthen and we lost faith in the pound moving any further with double top. So we pulled back, made a new low, market structure, then started to look bearish, coming back down into there. I think on this as well, there is every possibility if we're going to continue the way we're going to continue for the next 12 months, pound US dollar could come down and test parity down here. Long term, 12 to 18 months, depending on obviously what happens with world events moving forward. But I don't see this potentially staying up here. I think we're coming down on this. So again, I don't want to long it. Yes, it's very extending. This is exactly where I'd be looking for longs and thinking, yeah, want to be in it. But look at the pound US dollar. On the buyer's scorecard, it's the biggest sell out there at the moment. Yeah, fundamentals are all pointing against the pound. Retail and COT are all shorts. Everything is saying short the hell out of this thing. So I do not want to be mean reverting it. I want to be getting in. If it can mean revert, fine. But I want to be getting in when you've done your mean reversion. I want to be shorting you on a pullback. US dollar yen, undecided on the yen. So this one is actually starting to move. We've got this gap fill that I said about yesterday. Highly likely to get that gap fill done. That could be it though. We could just do the gap fill and run. Stopped out on the DAX. It's pushing again. So yeah, I don't know on this one. I'm still not convinced on any of these yen pairs at the moment with strength. Just at the moment. So we're not going anywhere off the back of the US move. Swiss yen's just about to give a reversal. We've got a gap fill potential there as well. But yeah, I don't like the yens. I still don't know which direction to trade these yens in. I think they are going to strengthen up. And I played this New Zealand dollar yen short, didn't I, from here? But I got out here and wasn't convinced by it. And it is coming down now. So I think, yes, good strength on the yen. So again, US dollar yen extended to the upside, potentially a good short. However, with a strong US dollar, it's likely to be able to beat the yen back. So this is the pair out of all the yen pairs that I wouldn't want to take short. Others I wouldn't mind. Pound I would take short. CAD I would take short. New Zealand and Aussie potentially I would take short. Euro and US I don't really want to because they're both strong. So nothing on the RSI dash really today that I'm really interested in having a look at. So pound New Zealand is still coming down. So DAX has pulled up into the propulsion. I'm going to leave this. I'm just going to leave this today. I can't really read this. That's the scenario I said about. I was worried about being a W pattern reversal. You know, again, that kind of demonstrates, isn't it, what I was saying earlier? Yeah. Whenever you get into a trade, there's a 50-50 shot on whether or not your strategy is going to play out. When I got into that short there was two scenarios in my head. One was breaking that low and testing new lows. Two was W pattern reversal coming back up into propulsion. As long as you know what is coming, you can plan your trade. So you have to think every time you get into a position, where's this going? If it's going up, where's it going? If it's going down, where's it going? Because it's going to go to one of those places with 100% guarantee. It's always going to go up or down. We know that. You just don't know whether when you get into your trade, you're getting into the right one. One of them was going to work. I got the wrong one today. And this is what I mean about proper valuations. Yeah. If I get into the wrong one 5 times in a row in a day, I blow the evaluation. If I get into the right one 5 times in a row in a day, I pass the evaluation. My odds are always going to be the same every time I take an evaluation, whether I pass or fail, because my strategy is always going to have those odds when I get into a trade, because one of the two things that I'm thinking is going to happen is going to happen. That's the bit that people who pass evaluations first time, second time round go, I've cracked it. You haven't cracked it. You've had a lucky run. What you need to do now you've cracked it is reduce your risk right down to 0.25% and see if you've got an edge there. Because if you start hemorrhaging cash now, you know that you were lucky. You're not going to know that until you get into trading the real account, are you? Ladder, I am for the new lows below 1450 until March would be nice. Yeah. Don't know which one you were talking about there. As you pull your chart over from the symbol, pull down. How do you manage to have the same chart set up without having to reload the template? So this is my default template. So you save your template as default. Yeah. And every time you load a new chart, it loads your default template. But if you're feeding from here, all it's doing is changing the instrument. But if you open a new chart, that's my default template. But if I made that my default template, that is what would open every time I open a new chart. So you just use a different template. But every time you pull from here, all you're doing is you are saying change whatever template I've got loaded on this chart, change it to this instrument. Right, so oil. Let's have a quick look at oil. I did. So yeah, I'm going to leave that for the minute. The DAX. Just either I'm going to take this breakout or I'm going to leave it, because there's really no way of telling where this thing's going today. This thing could just do that all day inside this range. It's basically exhausted itself on that move. It's just got nothing left at the minute. I want to break, but every single break that you take from a market structure perspective inside here could go either way, couldn't it? It's difficult. There's not really any directional bias, so I'm going to leave it. Oil. So with oil, we were looking at market structure. Low, high, low, high, low, high is what I was looking for. I said, if we break this level, that is where I would invalidate that market structure. So what we've actually got now is an expanding wedge. Very, very difficult to trade expanding wedges. If you look at this on a weekly chart, you'll find that we've got an outside bar formed now, or forming, potentially. So it's very difficult to tell where oil is now headed. We have got the bounce, though, off the double bottom here. So it's a long. I didn't really want to take this because this move here, you see where I got out. So I got in here looking for the high. I got out in this propulsion gap. Thank God I did. And we pulled down very, very hard. I didn't want to take this double bottom bounce because I was worried about basically that getting invalidated and then a pullback and drop back down to test this low, which is still on the cards. Yeah, all we've done is double bottom until we break that high. Yeah, look at the highs, the lows. Yeah, the market structure on this at the moment is very much a short. This is exactly where you want to be hitting the short button if you're short biased at the moment. So there is potential for this to come back down. So oil I'm leaving alone for the minute. I want to see a new high get invalidated, a new high put in basically, and then a pullback, and then potentially look to get in long. I'm not going to take this because it's a bit too dangerous. So undecided on oil. Oil is undecided, obviously, itself. Look, I mean, it's literally just in a range at the minute. All we're doing so far is playing inside of this range. Yeah. So there's your range on oil. Easier to look at on 1 hour. So this low, I would definitely be interested in longs. Definitely. There's going to be a load of limit orders sitting down there. That's last year's low. If we get down to there, then yeah, I'll be buying that up. But I'm skeptical about that until I've got a confirmation of market structure. So we've had a reversal alert on the hourly. So market structure has shifted, but I need to see that get broken, pull back, and then that's what I would like to take. Bit too dangerous at the minute. Excuse me. Frank, drag symbol onto the chart from market watch list on. Yeah, just covered that way. I've just stopped out of that. And New Zealand. So that one just got taken out on that trailing stop. See what I mean? We're unable at the moment with this to make new lows. We've just tapped straight into the Asian lows and pulled back. So until this shows some signs that it's actually got some legs and it can get down, I just want to get this in the bank. I've got a sell on here at these lows. So if we pull back up into here, I'll be shorting it again. There's no propulsion gap to trade into at the minute. So literally it's a case of if we pull back half an ADR, which is 80 points, 80 pips, somewhere up into here, I'll be taking a second position somewhere up here, which will be basically a retest of that reversal alert. So we've got the reversal alert there. So we're looking for a retest. That's where I'll get in with a view for that coming back down, testing those lows at some point. If anybody's got anything they want to look at, let me know. DAX yesterday. We didn't really get anywhere again. We've gone into this horrible wiki thing again, look, that we had here. So we had a nice spinning top day. We're putting in a spinning top day. We had a spinning top day there. We're making moves. So we've got a new lower low, lower high. We're currently sitting on an inside bar. So it's a break of yesterday's high and low, which is what I'm interested in, which is why I was looking at that today. Oil RSI alert. So that's why I was looking at that today for a breakout, which is basically push out of that low and a bear move. Very difficult to pick anywhere here that we're going to pull into. So for me, it would be obviously targeting ADR. But yeah, tricky at the moment. Dances, I don't trade Bitcoin. But if you want to know what's going on with Bitcoin, just look at the indices. They do the same thing. FTSE, yesterday we had an inside bar. So we're creating a symmetrical triangle at the moment, contraction. So this is getting ready for a breakout. So yeah, inside bar off of the push up into all-time highs. So UK market doing very, very well. NASDAQ, the S&P and the Dow all yesterday indecision. So slightly bearish. The Dow, this thing's turned into an absolute wick monster. Because the size of the wicks on this thing at the moment, I'm really getting interested in trading the Dow because all these are all rotation days, typically very difficult to make money out of. With the opening range breakout, this thing's moving so fast. It's brilliant. But at the moment, yeah, no direction yesterday. So literally, pushed down, pushed up, back to square one. Same as the day before. Pushed up, pushed down, pushed up, pushed down. Really no directional bias whatsoever. S&P ever so slightly bearish. Gold, I'm long at the moment. Wishing I wasn't, but I am. So sentiment at the moment on gold. Everybody's long with me. That's why I don't want to be long. If I'm long, retail's long, they're after my stops, which are down below. So, yeah, I want to be short, but I'm long at the moment. So I'm looking for a break. I mean, I basically just want to get out of this. So if we can tap yesterday's highs, I'm exiting. I'm out. I'm done. Or at least I'm going to put a trailer on it just to make sure that I can break even and get out. So I don't want to be in it. The trade is back into propulsion, but we need the US dollar to take its foot off the gas, and it doesn't seem to be at the moment. So just not great. You can see we've got a reversal alert long, followed by a reversal alert short. We're just sideways at the minute. There's no directional bias on it, and every time it tries to push up, well, every time it's only pushed up once, but we tried to push up yesterday, failed. London pulled it straight back down. New York didn't go anywhere. We opened and closed in the same spot. Asia's tried to push this morning. London's coming back down to retest Asian midline. So we haven't got any directional bias yet, but hopefully we just get a little bit of a pop out of it. But gold, it's a difficult one. It's basically it's a US dollar cross, isn't it, at the end of the day? So if the US dollar is going to power up, gold's coming down. We don't know yet whether this move is sustainable. So we need to wait and see. I like the FTSE killing it on the charts and teachers going all gloomy. What? I like FTSE killing it on the charts and teachers going all gloomy. That's cryptic. I've no idea what you're talking about. Don't get it. I like FTSE killing it on the charts. How teachers going all gloomy? It still doesn't make any sense. I don't know what you're talking about. Sorry, dancers. Tony, I've watched a vid today on Bollinger Band breakouts on the 2 standard deviations on the daily and the fact there is very low % chance of a follow-on. Have you done testing on the 4-hour or daily? Yeah, Bollinger Band mean reversion on the daily is brilliant. That's an old Larry Williams strategy. 2 standard deviation Bollinger Bands on the daily. Bollinger Bands. So depending on how you do it, Larry Williams, I can't see those, can you? Hello, I'm clicking on you. So Larry Williams basically was, the idea was, I think he was candle close. So I think the way that Larry did it was as soon as you get a piercing, you pending, and then you take the pending short and you do what's called a closing profit exit. So the closing profit exit basically is as soon as that trade is in profit on the close of the daily candle, you exit. So you would have exited there. So he doesn't use a stop. Larry Williams, like all good traders, not pumping myself, do not use stop losses. Yeah. They will scale out of positions, but there's no point in putting a stop loss in because all you're going to do is lose it. So Larry used what's called a close and profit exit, which is basically push outside. And then as the candle closes inside, you either take an entry straight away as the aggressive, or you take a pending entry under the low of the candle that broke, and then you exit there. So here you would have waited for the candle to close inside. You would have had an entry. No, you wouldn't have got one there because the entry would have been there. That one, you would have got an entry there. Or if you're aggressive, you would have got an entry there, and then there, and then you would have exited there. That one, you would have got either an entry aggressive there or pending entry there and exited there. That one, you would have got an aggressive entry there, pending entry there, exit there, and so on and so forth. So yeah, great strategy, works fine. I can build an EA to do that. In fact, I have built an EA to do that. And I have got an EA that does that. If you go and get Larry Williams' book, all Larry Williams' stuff, all of his stuff works today. It's all great. But it's all daily charts. So if you're happy to trade the daily charts and not make intraday money, no problem. But the trouble you will have if you try and trade, obviously, if you want to trade prop, daily charts are not really usable because you've only got 20 trading days to pass. So if you've got a trade like that one, for example, that takes 6 days to play out and you're risking 0.25%, 0.5% on the trade, you're not going to pass an evaluation, are you? You're not going to have enough time. So you need to use a prop firm like CTI. CTI don't have any upper limit. Or EA. EA don't have an upper limit. But you've got to be able to hold at weekends as well. So you can't use someone like Surge Trader because you've got to close at weekends. You know, all these prop firms out there, if you want to get funded, they are all good and bad in various different ways. So you pick the one that suits you and your trading strategy. If you want to trade daily charts, you can't use somebody that's got a max limit. You can't use someone that's got a close at weekends. You can't use someone that says you've got to have positions flat over news. So you pick a prop firm that fits that profile. If you're a scalper and none of that makes any difference to you whatsoever, pick anyone you like, but pick one that doesn't force you to use a stop loss and doesn't force you to use a maximum upper lot limit. You just pick one that suits, which is why I use my Forex funds in E8 because they suit everything. Doesn't matter how I want to trade, they suit everything, apart from the upper day limit on my Forex funds. It was top dog trading. Had a bell curve diagram showing the stat. Yeah, everything you'll find on Tony. There's nothing on the internet that isn't been stolen from someone else on trading. Yeah, top dog. I could do a video on it. It's not my strategy. It's Larry Williams. You know, they're all recycled. Everything's recycled. There's a guy out there called the Transparent Trader. He does nothing but recycle Larry Williams strategies, and for good reason because they all bloody work. They're great. I run Larry Williams'. I run Larry Williams' smash day strategy on the S&P 500. When the S&P 500 is trending and bull market, I run Larry Williams' smash bar strategy is my pension fund. Yeah, I don't do anything clever. I run Larry Williams' smash bar strategy and I milk that thing to death. 15, 20, 25% return. No problem. Not going to make you a millionaire because you're trading the daily charts. Unless you over leverage. If you go in with 5% risk per trade, obviously you will make you quadruple your account. However, if we suddenly turn into a bear market, you will blow your account. But moving this down, that strategy we just looked at, moving that down onto H4, the edge vanishes very, very quick. Anything below that, your edge drops very, very, very quick. There will be ways to make it work on lower time frames, but you will need to adjust and test and that sort of stuff. So, and that's what EA development's for. There's a page on my website. Got a strategy? Needs an EA? Yeah. I'll build you one if you want to test it. If it's a good strategy. Need all that information. Everything that's in here. I need to know all of this because to build a strategy, we need all that information. You can send it. I'll have a look. But I think I've already got that one. Tesla seems to be on a pump. It would have made perfect sense if your channel was called The Position Trader. Dances, are you okay? I'm worried about you. I don't know what you're talking about. I like footsie killing it on the charts and teachers going all gloomy. It would have made perfect sense if your channel was called The Position Trader. No. Morning, Steve. So Nasdaq's pumping. DAX is probably helped along with that as well. So you can see where my trading stops this morning with the ORB pre-market. So if we get back up into here, I will be taking additional trades. That's your 15-minute opening range high break anyway, and low anyway. So if we do get out of those, I'll be getting in on a 15-minute opening range. I've got at the moment pendings on that pre-market break, but you're straight into pre-market highs, so it's slightly dangerous. What I would like to see is them push up into here and then drop it. That'd be a lovely opportunity for a short, but we'll see. So I'm just going to monitor that because we're getting close to potentially getting into another position on that. So buyer scorecard, obviously, and your sentiment. Oh, that's the other thing I was going to cover this morning quickly. So go and check out the buyer scorecard, obviously. Oh, that's simplified. For your buys and sells, best buys and sells out there at the moment are those. So look for opportunities to get in on ADRs, RSIs, reversal alerts on those pairs. Sentiment wise, it's pretty much the same as it was yesterday. Pound US dollar, Aussie dollar, US dollar are the main shorts, as well as the pound New Zealand, which I'm already on, which seems to be coming down again, which is good. So that's coming down. So those two that I exited, could have stayed in them, but I like money in my bank, so I put it there. So back in profit on this position, looking for an ADR hit to get out completely on this. So if I get out completely on this, this will be somewhere in the region of about 0.8 to 1% on that move. So yeah, so those are the good shorts at the moment. Euro Swiss is mixed. That's mixed. So the longs are Euro Pound, which I'm in. So long on Euro Pound. And obviously, if this pushes down, I'll scale in to that. And then you've got US dollar yen, euro yen, and US dollar CAD is the other good long opportunity today. But again, these US dollars, still not sure on the US at the moment as to whether we're going to continue that strength move. So, so the other EA that I'm developing at the moment is the sentiment EA, and that's taken a load of trades. However, I found a bug in it. I forgot to set the rule up to say take the short sentiment trades long. So all it's doing at the moment is selling. But yeah, I'll be working on this. I'm just testing, obviously, functionality on it at the moment. But it is pulling through all the data nicely from the website. But it won't take these longs because I've blown up the EA. I have fixed it. So I've just got to re-add all these again today. In fact, I don't have to re-add them. What I can do is save the template and restart the MT4, and then it will have the new code running. So I'll do that now. Do that in a sec, actually. So yeah, so basically the sentiment EA is, I'm just testing functionality. So it's taken a few trades this morning, which is good. I've also changed the EA. I'll show you actually on here, it's easier. So it now also puts the sentiment reading above each entry as well, which I thought would be really handy, because what I'm seeing is it's taking trades and I'm thinking, why have you taken that trade? I just want to confirm it. So what I've done is this is going to only take shorts. There we go. So it's taken short there. And it tells me it's taken a short because we've got yesterday's high breached, we've got last week's high breached, and the current short sentiment is 9. So it actually puts the sentiment figure there. So we can see when it's taking trades and it's drawing its little arrows, we can actually see the readings and how the readings change from sentiment on each trade or each potential entry, because obviously it will only take one there. It's not going to get in on 5 times because we're in, but those are the opportunities to enter on the high sweep. So yeah, so that looks pretty good. It's all working. So it's a case of leaving this live testing now and run it and see how it performs. I haven't really set TPs on anything. I'm just wanting it to get in. I'm not using stop losses. I just want it to be in so that I can see what sort of drawdowns it achieves and you know, how to get in and out with it, really, because you can't backtest it because we haven't got backtestable sentiment. So yeah, that's pretty good. I'll update you when I've got some more thorough testing done on that. Let me just watch the DAX quickly because we're approaching back to this area again. Tony, you never know, maybe. I do like the idea of EAs. Only trouble, I hate MT4. Just can't get on with it. I use CTrader. Well, you don't need to like MT4 to use EAs. You don't have to use it, do you? I don't. Look, all my EAs are trading on this VPS. I'm not using any of it. It's just there. It's just there. All you got to do is set it up. So you just open a chart, double click to put the EA on, load the set file you want, which are all provided. Click the OK button. And that's it. That's all you need to know about MT4 to use EAs. Just simples. You don't have to use it as a trading platform. Carry on using CTrader. Just use MT4 to execute your trades for you. So we're just approaching this high. So I'm just going to watch this area because obviously this is our opening range, pre-market 15 opening range before the breakout happens. So we're basically returning to the origin of the breakout. So that's a shame. Didn't quite close inside. So what I'm looking for here is rejection, signs of rejection. So if the sellers that started this move are part of the sentiment for today, we may well see a new batch of limit orders triggering in this area. And the buyers basically being stomped on. So I might take a manual. If we don't close inside here, I'm not going to get the pending orders on to get the entry. And we're right coming up to the 1.5 hour mark. Yeah, 1.5 hours into the session, you have seen either the high or the low of the session. So either that is the high of session or that is the low of the session with a 90% accuracy, which you don't know which. So I might look at taking potentially trade outside of this level. Obviously, the longs are going to get triggered anyway because ORBEA is trading those. Dances. First was a misspell. As for the name suggestion, isn't it logical since your style is called position trading? I trade market structure. That's why I call myself the market structure trader, because I'm trading market structure. Position trading is a methodology. The strategy is market structure. You can trade market structure with a stop loss. I do. I am. I did here. That trade there with a stop loss was a market structure trade. Market structure, I was expecting to be that. market structure turned out to be that. Doesn't matter. Market structure is market structure. How you trade it is entirely down to you. Position trading is just a way of trading structure or trading anything. You know, you can position trade that Bollinger Band strategy. You can position trade a Bollinger Band strategy. Yeah. So if you want to trade this Bollinger Band strategy as a position trader, you can do that. So you would take, let's say you were taking a break of a piercing of the band. Got 2 minutes left on that candle. Just want to watch that. So let's say you're taking a piercing of the band, right? So you take a position there, it pushes down, you don't get it, pushes up again, you take another position there, pushes down, you don't get it, take another position there, keeps going, you take another position there, comes down, you exit. Yeah, you can position trade any strategy. Position trading is a methodology, a way of entering and exiting the market. The strategy that you use on position trading is entirely down to you. I share in the bootcamp the way that I position trade using RSI and market structure reversals and ADR. Yeah, if you want to use the Bollinger Band as a position trader, do it. Works. I just proved it. There you go. 15-minute chart yesterday. If you'd have position traded the Bollinger Band breakout, you'd have made a lovely little trade there, wouldn't you? This morning, if you're Bollinger Band position trading, you would have taken an entry there. You would either got out there or you would be in your second entry now. Yeah, your average is here. So if this now pulls back to there, you can exit with no loss. I could, oh, bugger. I was just about to say what I might do is place a pending order under that low, just in case the limits trigger. As I just said, the limits trigger at the source of origin. I might place a pending. I've just missed it. That's annoying. I'm just gonna watch this candle. Here we go. I'm going to take a sell on that. That stop loss is a bit too tight. So we've basically just broken the last 10-minute low there. And we've also broken that high. So I'm looking for basically this candle, this next green candle, to push up no more than 50% of that candle and then start a structure break to the downside. So obviously market structures today has gone down. Temporary market structure back up. So either we're going to continue, I'm going to get stopped out, we're wrong, or market structure today is that. Yeah. So I mean, it doesn't, market structure is market structure. Whether you're scalping, what you're doing, it's all price action driven. Everything is driven by price. So I'm trading price action, market structure. I'm scalping using a stop loss in this particular instance. I could position trade this. Pound odd ADR. Pound New Zealand will be coming down nicely as well. Again, I don't want to be long in the pound. So up to you if you want to take this as a mean reversion. I'd wait. Obviously, you need to wait for some kind of structure break to show you that it's actually got some bulls on board. It's going to be quite tight this morning, so it's not bad if you get that reversal alert there. I mean, we have already retested that propulsion gap, so might not get there. You know, whenever you're taking a trade, regardless of whether what strategy you're using, when you get into a trade, the first thing I think is, where's it going? So if I'm thinking of hitting the long button now, my first thought is, if it is going to go long, where is it going? Have I got somewhere for this thing to aim for that makes logical sense to take a trade with a stop loss, for example, of that size and a TP of that size? Yes. Get in if you fancy it. Has it already tested that? Yes. Probably not necessarily going to be a level that we'll get to again. Why? Because market structure is bearish. So likelihood is we'll only get a pullback into there if this market structure short is going to continue. So is it a good trade? Long? Probably not. Pound is weak. Australian dollars just had a rate increase, meaning it's fairly strong. I'm just about to get stopped out on my DAX again. Not having much luck with the DAX today, am I? I do like this. That stop loss is too tight. That's the wrong stop. Sorry, what's that? Oh yeah, that's only $200. Yeah. No, I'll take. That's not. Why did that place that stop so tight then? Oh, I pulled the wrong stop loss. That's why. I thought my stop was a bit tight. I put a 30-point trailer on it, and I measured that as only being like under 20, and I was like, why is the stop loss been put there? So that's where I want my stop. I should have just used last candle, shouldn't I, as a mode rather than. Anyway, don't matter. So yeah, so when you're taking a trade, always think, where's it going? So if you are taking a mean reversion trade off of ADR, for example, like this is, if the market structure is going to continue to the downside, you need to think, where's it going to go? So once it gets up to there, you might be interested in break-even stopping. If you've got a long bias on it, because you're in a propulsion gap here and market structure is long, yeah, you'd be thinking that way. So again, you know, depending on which time frame you're looking at, if you're looking on the hourly time frame, now this looks a completely different picture, doesn't it? One of two things is playing out. That, in which case you do not want to be long in that, or that, in which case you do want to be long in that. There's your decision, yeah? This is why there's no holy grail. There's a 50-50 chance of it doing one of those two things. We don't know which. No one knows which. I don't know which. You don't know which. People that are moving this market don't know which, because it depends on who has got the biggest pockets every single day as to whether that thing goes up or down, and you can't forecast that. So you just have to go, right, well, we know that market structure, if it follows a market structure route, is going to do that or that. So therefore, where do I want to be in? There. Where does market tend to bounce and test from? Propulsion gaps. We're in one now at ADR, which is usually where it stops 60% of the time. Good looking entry. Wait for a reverse alert, take it. The odds of it playing out as soon as you get that reverse alert and you hit that button are 50-50. Every time. It's going to go up or down. And if you want to position trade it, obviously the next thing you think is, right, I'm going to get in on an ADR bounce because I think market structure's long. If I'm wrong and the timing of this entry is incorrect, where will I get in next? Either there or there. That is half an ADR apart. So anywhere in that zone, I will be happy to take a second position. And if it gets all the way down to there, without having done a profit take move that I can exit on, the RSI is going to be extended beyond normal levels, and in which case we will get a profit take. So scale in, wait for profit take, scale out, done. Every time you press the button, you need to be thinking, right, what's my plan? It's either going to work, happy days. It's not going to work, second bite of the cherry. If that doesn't work, third bite of the cherry. Let's go out and have a look at where we need to go on the 4 hour. Ooh, trouble. Again, this is why I'm not really interested in long in this. Look at where we bounced. Yeah, if that doesn't hold, where are we going? There's not a lot of choice, is there? Maybe that is it, yeah. So that's your next level. So planning your trade, first entry, second entry. It's a long drop without a parachute. I just don't like it. But it might work. A little bit stuck. Gold's almost giving me an exit. But again, this gold trade, look, I mean, where I'm sitting now on this gold trade, we've been massively extended on the RSI after the move on Friday, followed by the rate announcement earlier in the week. This thing needs to breathe. Unfortunately, there's that type of breath, and then there's that type of breath. Don't know which one we're getting at the moment, but right now it looks more like a flag than a profit take, doesn't it? However, this thing in 2 candles could just go pop, pop. And all of a sudden we're up here and I'm sitting in 0.5% to 1% of profit. Which is why, the rule of position trading is to keep your entries within an ADR. As long as your break-even point is well within that ADR line, if you're long, and obviously the opposite if you're short, you need 1 or 2 candles as a profit take move to get you out of your position. That's all you're waiting for. You're just waiting for the move to be over, waiting for the guys that have piled in short and have a massive balance sitting there to go, right, guys, time to take this money. Bang, bang, profit take. And all of a sudden, you're in it. That's what we're doing. We're waiting. We're riding the waves of profit take moves. We're riding the market structure. As long as the market structure continues, they buy it, they profit take. They buy it, they profit take. As long as that market structure continues, we will always have an entry and an exit. It's when they go parabolic, that's when you get into trouble. But we don't get into these parabolic moves really because we get in after the parabolic moves have happened. You're never going to catch a parabolic move as a position trader because you are always waiting for the profit take move rather than the propulsion move. These are your breakout traders. Your breakout traders are getting the parabolics. But they get stopped out 80% of the time because the market spends 80% of its time in a range, stopping out breakout traders. Kind of the best of both worlds. Make sense? You're on the bootcamp enjoying it thus far, yeah. I'm planning to do the bootcamp live, so I just need to sit down and get some time put aside to plan the content, really, just so that I can break it down into more manageable parts. That propulsion gap sounds similar to what ICT calls a fair value gap. Yeah. ICT stole it from a guy that invented it called, I don't know his name. He didn't steal it. It wasn't. You can't steal something that's put out on the web, can you? It's ICT repurposed it and called it something different, but basically it's called a wide range bar. I don't know if I've shown you the website, but it's this guy invented it, Strategy Lab. Yeah, it's called a wide range bar. I must find out the guy's name. Oh, John Hopkins. There you go. No, that's John Hopkins around a finance research centre. What's his name? Don't know. But the wide range bar basically, it's copyright all over it. I mean, basically, if this guy wanted to, he could go and sue ICT, couldn't he? Yeah. He's basically stolen the wide range bar. Yeah, it's his concept. He came up with it. And you can tell by the age of this website how long ago he came up with it. 2002. I don't know how long ICT's been going, but he became famous when YouTube became famous. YouTube wasn't around in 2002, so I can categorically say without any shadow of a doubt, this guy came up with the concept of a propulsion candle before anybody else, because this guy's website was built before YouTube was invented. So, but if you want to know more about it, go to this guy's website. It's an absolute minefield. WRB zones. There you go. Oh, that's a trading view link. There's loads of content on here about them. God, what the hell's that? But yeah, you really have to WRB analysis tutorial chapters 1, 2, and 3. There you go. This is the document that explains the WRB theory. Here we go. So if you want to learn more about this, but they're basically, why the bloody hell can't I move that? They're basically WRB zones, wide range bar zones, are propulsion gaps. So he calls a wide range bar a propulsion gap. So you can see he's identified them here. Look, that one there. It's a wide range bar. That is a wide range bar. That is a wide range bar. That is a wide range bar. It's called a wide range bar. Yeah, and there is shown on a candlestick chart, a wide range bar. Wide range bar, hidden gap. WRB hidden gap, which is what he calls a fair value gap. I call it a propulsion candle. Because that is what it is. This is a move, a propulsion move, which creates a wide ranged bar. The range of this bar is wide. It is a fair value. I don't know what the terminology where fair value comes from, why this is fair value as opposed to something else, because I don't do it. But at the end of the day, it's a strong move by the sellers that I want to get involved in if they come back and test it. That's literally all it is. And the fact that they've done that means that there's going to be a profit take move, usually coming back to where they can't push it any further. So the theory behind this, as I trade it, was explained to me by this guy. Yeah, and there's all sorts of different things you can learn about it on here, but honestly, it's a minefield. All you need to know is, in a nutshell, when these happen, price comes back and tests them a lot. So you either use them as a target or you use them as an entry. But everything on the web is recycled. Like Tony said earlier about that guy who is showing a Bollinger Band strategy. That's Larry Williams. But he's called himself I don't know what he calls himself. You call yourself what you like, don't you? At the end of the day, all you're doing is showing a way of trading. It's just another way of looking at the market. It's all the same stuff, just with a different name, different brand on it, different stamp, different whatever. I'll actually try that Larry Williams BB strategy on H4D1. Looks promising, especially on the commodities. Yeah, it's great. It works really, really well. I don't know if I've got Larry's book on my desktop. Yeah, I have. I've always got Larry's book on my desktop. Volatility breakouts, momentum breakouts, S&P. Search. Whoops. I'm not sure if it's in this book, actually. No, it's not in that one. It's in one of these other ones. But yeah, I mean, a daily, if you want to trade the daily chart, right, there's very few strategies you will find that do not work on the daily chart. Very few. There's always going to be a way to make money on the daily chart. Trend pullbacks on the daily chart to the 24, for example, a simple trend pullback strategy very rarely won't work, because by its very nature, the market has to breathe and take profits. Yeah, I mean, obviously, as long as you're staying pretty much in line with the trend. But on the daily chart, you know, it's very easy to make money, but it's not easy to make a lot of money. Does it apply on smaller time frames to lesser propulsion candles? Yeah, I mean, propulsion gaps work on all time frames. So just starting from there, for example. So propulsion gap, test. Propulsion gap, another propulsion gap there, test. Hit, that one. Propulsion gap. That is not a propulsion gap because it didn't break a new high. That is a propulsion gap. Test. Propulsion. Test. Hit. Propulsion. Test. 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 Pop. Propulsion. Test. Move up. Propulsion. Test. Going back down again, straight through those propulsion gaps. Created a propulsion gap there. Pushed down. Pushed up. Tested it. Propulsion. Test. Orphaned at the moment. That's tested. Orphaned. Right, so these two propulsion gaps there and there are what I call an orphan propulsion gap, orphan wide range bar. Yeah, and these often will happen during fundamental shifts. So when you get the lower the time frame, the less likely these are to hold. Like anything, every strategy you trade, if you trade it on a lower time frame, the strike rate drops through the floor, which is why if you trade on the hourly, 4 hourly, and daily charts, you will make money. If you trade on the 5-minute charts, you're trading algorithmic chop. 15, to a certain extent, you're trading chop. You're trading what's going on intraday. But on intraday, these work very, very well. Yeah, that will probably get tested at some point in the next week or so. If you go up to 15-minute, pick another instrument. Yeah, propulsion. Again, wide range bar theory. If you go to this website and I mean, to be honest, don't do it because there's no point. You will get lost in here for weeks. But in a nutshell, when you get a propulsion gap, it needs to ideally have an accumulation before it. Propulsion. That propulsion candle needs to break. It needs to be a breakout. Yeah. So this one here was a propulsion breakout of that range there. It didn't break that low. So it's not great, but look, tested, dropped. The reason for the testing is because the people that started this move, when the buyers tried to come back and beat them, they went, no, we're short. No, we're short. All right, fine, we're short. Get out. So this guys have all made all their money. And they made sure they made money by making sure the buyers had the message. That's the way you need to look at it. They're battlegrounds. We came back up and retested it again. Sellers started to add in, but by the time we got there wasn't enough sellers left, so the buyers overpowered them, left that propulsion gap in place. Moving forward. That's not a propulsion gap because it didn't really break any highs. Yeah, there's lots in there. It's chop basically, but you got one there. It retested, it came back, they retested it, bought it out again, came back, retested it, pushed up into that one, slammed through that one. This one here, which was a break of that low, got retested there. This one here again retested, the buyer stepped back in there. The one there, slammed through that. That's a news event. That one there, accumulation, break, retest, add to sells. Yeah, this one here that was orphaned, 1, 2, 3, 4, 5, 6, 7 days. Yeah. But look what happened when we got there. Yeah. This is a 15-minute chart. the guys that started this move, if they're trading the 4-hour chart, yeah, that's a 7-day move on a 4-hour chart. This is an intraday swing they're adding. Yeah, that's not a propulsion gap because there's no accumulation before it. But it was a big, strong move, and they did add to it. But you know, so you can't. There is no, again, with everything, there is no one rule that works. Propulsion gaps. I've built EAs to test every possible type of entry and exit using propulsion gaps. I can't find anything that works 100% with a good edge. If you were, every time you get a propulsion gap, however, to sell towards that propulsion gap, 85–90% of the time, it would work. Because they just do. You know, all this is doing is highlighting on your chart, nothing clever. It's highlighting on your chart an area where the large institutions started a move. That's all it's doing. A propulsion gap is, to get one of these propulsion gaps in the market, an institution needs to dump in excess of 500 to 1,000 lots over and over and over again in a 5-minute period. And they keep pumping and pumping and pumping. And if you trade futures and you use Jigsaw or Bootcamp, you will see these orders being slammed in there. There will be 100 contracts, 100 contracts, 100 contracts. Every time we come back to that level and we try and sell into it, they will buy up everything. You can sell 1,000 contracts to me. That's fine. I've got 1 million contracts sitting down here. You are not having a short. And eventually all these people that are trying to short it will go, all right, whatever, bang, and the move starts. So all this is indicating is an area where the institutions were interested in going long. If we come back here, the reason it does that is because the institutions are long. Do you think they want to take a loss, or do you think they want to make a profit? Do you think they've got the power to force a profit? Of course they have. They're the institutions. There's only 10 of them that drive the whole market. So when they move, we were interested. That's all it is. That's all WRB strategy is a theory to show where the institutions are buying from. Other people repackage this and call it supply and demand. It's support or resistance. Call it what you like. It's just an area on the chart that's of interest. All we do is we either target it or take a trade at that level. It works on all time frames. Yeah. Propulsion, test, test. Propulsion, test, test, test. Propulsion, test. Propulsion, test, test, test. Yeah. Propulsion, test, propulsion, test. When it gets back down to here, 125 ADR, what do you think might happen? There's no certainty. It could slam through it. No idea. But you know, all that is if you wait until you get to these zones and you wait for a market reversal alert. Yeah, wait. If let's say, for example, there's a whacking great propulsion gap here. If you get a reversal alert in there, what's it telling you? The buyers are stepping in. There's a market structure shift. So if there's a market structure shift at an area where they bought from previously, a high probability that you're jumping on board with the institutions. And that's all his strategy is. He concentrates on 3 or 4 specific setups, though, which are to do with news trading. So his rule number 1 is, if this propulsion gap is not caused by a news event, it is invalid. I personally don't believe that. I think that if there is an accumulation and you get a propulsion move, regardless of what caused that event, we know that the seller's on board. This one here, for example, look. Accumulation, break, test, drop, test, test, drop. So what happened here was we accumulated. We had a propulsion move that broke the low, causing a propulsion gap. The buyers came up, the sellers added. The buyers tried again, the sellers added. The buyers tried again, the sellers added. The buyers had a run up, the sellers added. That zone is where that sell move started. The buyers who were buying here all had their stops under here. What happened when we got to their stops? They puked and went bleh. So all these buyers at that point became sellers because they had to exit their positions with a sell order, which again, and that's why you see propulsion starting again. Another propulsion gap. Why? Because there's a strong move, because everybody that bought became a seller and added to the people that were selling. What's that? Market structure. Same thing. And that's why I use wide range bars, because they form part of market structure, or propulsion gaps, or whatever you want to call it. And again, you know, like going back to what Dances said about ICT. ICT stuff, not that I've gone through it all in massive detail, but at the end of the day, it's all the same stuff. It's just market structure. It's just a more complex version of market structure. It's just another way of explaining the same thing that we've been using since Chinese candlesticks were invented. Structure, highs, lows. If something is there and it goes to there, and then it goes back down to there and it goes back up to there, it means that there's people interested in buying it. So as long as people are interested in buying it at the prices that we go at, market structure will continue until the point where all of a sudden market structure doesn't continue. Then we need to pay attention to the sellers. Here, that is telling me at the moment that this probably isn't part of the speculative move today. This is the opening cash balance, which is again what this ORB strategy is based on. Opening cash balance. So we're interested in the speculative move, which is what the non-commercial traders who are looking to make money, we're interested in getting on their moves with them. This is the initial cash balance, which is basically the orders for the days being placed. So this is people just saying, I want to buy and sell stocks. Once those orders are out, then we start the speculative move. This was today's speculative move. So this isn't holding up because there's no speculators left here at the moment to keep selling this. You don't know until you get there. It looked like there was. There isn't. You know, this. I mean, there's no way of. You know, I have back tested this to death. I mean, that one didn't break a low, so that's not really a very good propulsion gap. But I mean, that worked. That worked. That didn't. I built an EA basically that every time we enter and exit, i.e. we come into an exit and break below, it goes short. So it would have taken a short there on that candle, and it would have taken a short on that candle. Stop is always the opposite side of propulsion. That one, it would have obviously stopped out on when it tried to enter there. So you'd have had two winners and one loser. Dependent on, and that's the thing that you can't tell, is the way to trade these is really with a mean reversion trade, where you've got to use something like a 1R, 1.5R, 2R reward on these trades. If you do that, the strike rate doesn't go above 50%, and it becomes very difficult to make money with them. The better way, I think, to use them is use them as targets rather than entries. But on low time frames, for scalping, that's the logic. So if you're going to get a trend day rather than a rotation day, wide range bars absolutely kill it. Look at DAX yesterday. I mean, the day before yesterday, I absolutely killed it. Wherever that is. Have I changed my template? Here. So I traded that all the way down there yesterday on every single pullback. So, you know, this is a trend day. It's a push, pull, push, pull, push, pull. I traded that market structure to the downside. Every time it pushed back, I traded that way. And then as soon as we got down here, and I saw us, and I posted all this in the Telegram group. As soon as I saw that, I went long and I traded that. So I went down, I went up. And that day I had 100% strike rate on my trades. If I was doing an evaluation on that day with 1%, I would have made somewhere in the region of 8 to 10%. I actually made 3%, 3.5%, 4%, something like that. But if you get a day where it goes into rotation and chops, and you try and do that, you'll get killed and you will lose 8 to 10%. You know, and going back to what we were talking about with evaluations on prop firms, whether you pass or fail or do well or badly in an evaluation depends on the day you start it, the session you start it, and whether that day that strategy works, which is why everybody gets killed, because everybody's going in with 1% risk on their trades. Whereas if you go in with 0.25% risk, you can take 4, 6, 8 trades a day. Maximum you're only going to get is 2% loss on your account if you get it wrong 100% of the time. Yeah. That's why everybody blows evaluations, because they're not getting in with a realistic risk. If I get chopped to death, then I go to 2, and that's why my max loss for the day is 2.5%. If I hit 2.5%, I'm really out of sync with the market, and it's not working. Stop. You got it wrong today. The trading conditions today do not match your criteria for your strategy. Try again tomorrow. Tomorrow you could have 4.5% return. Forget that. But you don't know on a day-by-day basis what's going to happen. Look, everybody that's been trying to get on that move, me included today, has been shorting. And quite rightly so. There's no reason why that trade shouldn't have worked. It had a 50-50 shot. That one there could have worked. That one there could have worked. I'm in that, and I got in that. So far, I'm being proved wrong twice. What have I lost? 0.5%, if that stops out. Doesn't matter, does it? The next 2 trades, the opening range breakout this afternoon that does that is going to make me 4%. Or whatever. I don't know. Whatever. I don't know. What's going to happen this afternoon? I don't know. I'm not a mind reader. Cam, the New Zealand dollar US dollar long on 4-hour RSI support from EMA. New Zealand dollar US dollar. So I'm still in that trade. Not going anywhere. That bearish engulfing look has turned into what I call a control candle. Again, I haven't invented this. Control candles. One of my mentors invented this strat, the control candle. So this candle, this massive bull candle, bear candle that started this potential downside move, until that high is invalidated, that bear candle is in control of the market. These bears are in control of the market because the bulls could not push above the high. So this is still a bear market right now until that candle is invalidated. Again, another theory you can test. Control candle breakouts. Other people call them accumulations. Call them what you like. It's the same stuff. New Zealand dollar US dollar. So we've come off of the 72 on this. New Zealand dollar US dollar is really down to your views at the moment on this US dollar, and I don't have any. So we had the interest rates, and interest rates were on the Wednesday. We had the interest rates and the move on basically the US dollar on Friday. So I really have no clue whether or not they're going to come and retest, or whether this is going to power up this US dollar. But at the moment, it really is not giving any clues, is it? So it is a really nice 4-hour RSI extension, M15 entry, which was yesterday. You actually had another one there yesterday. That one got invalidated by that break. So yeah, I like it if they are going to weaken the US dollar for a bit. I don't know if they're going to weaken the US dollar. Personally, I think after all I've been waiting for the US dollar to power up now for weeks and weeks. Before Christmas, I was expecting to get some US dollar strength coming through. It looked like it was starting, in December. It didn't happen. So I'm waiting for all this good news. We've had nothing but good news coming out of the Fed. I'm waiting for all this good news to actually kick in. So I am expecting and hoping that we get some US dollar strength. And now that they've come out yesterday and said, actually, we can foresee a good couple of interest rates, not the RBA. We got a couple more interest rate increases because we weren't expecting unemployment to drop. You've been waiting, yeah. Andy Armand's been waiting. Everyone's been waiting. It's all bullish. But and this is the thing about this job. The market has no clue you exist, and it doesn't care what you think. It goes where it goes when it goes. I have no clue what's going to happen. No one has. All you can do is analyze it and get in. If this US dollar is going to weaken, that's a beautiful 72 bounce, and we'll look to invalidate that high. If the US dollar is going to strengthen, I'd look for a propulsion gap test and drop. I don't know, one of them. Pick one. RSI mean reversion, or drop down hourly and wait for RSI extension short, or ADR hit short, or propulsion resistance short. What's your view? Where do you, I can come in here and say whatever I like. I don't know which way it's going. You go into another YouTube channel or another website, they'll give you a completely different analysis of it. They don't know where it's going either. Your job as a trader is to decide which way you want it to go and hit the button, but hit the button with a risk that means you're not going to pap your pants every time it moves against you. Yeah. I've got all these positions on at the moment. I've got, 12 trades on at the moment. None of them really much in profit. Am I worried? No, because I'm only 1.2% in drawdown. If the US dollar decides to just suddenly fly and gold drops, I'll take a bit of loss and transfer the loss over into my P&L. There's nothing I can do about it. But my position sizing means that nothing can move and hurt me. That's the difference. Yeah. And that's the one thing that I would say, if when you press that button, yeah, immediately you look at your P&L and go, oh my God, I'm in $100 of drawdown. You're worried about it. You've over leveraged. You need to find a point where you can go like that and just go, I don't know. That. Do I care? No. I couldn't give a monkeys. Yeah. Look at it. I've $3. I don't care if this goes up or down. If it goes up to there, I'm going to make $155. If it goes down to there, I'd lose 129. But I won't use a stop loss because it's pointless, because all that happens is I'll get stopped out. But I don't care if I go to 0.15 in profit or 0.15 in loss. That's the bit that everybody gets wrong. Everybody's like going in with 2 instead of 0.2. And when they hit that button with 2, right now I'm sitting in $65 of loss, and it's only moved in like literally 30 seconds. You can't sustain that. Psychologically, you're going to go mental if that happens to you all the time. But what you will do is at some point you will hit the button with that 2 lot, and 5 trades will go in your direction, and you'll go, oh my God, I have cracked it. And then you need to go and read this book and realize that you are on this point and you're about to get batted straight back down to earth, because the market doesn't care which way you've gone, and it doesn't care what lot size you've got or what your bias is or what you think is going to happen to the US dollar. This thing's going to go where it's going to go. And every time you think there's no way this can go any deeper, look at this. We never get down to this level. Boom. It has this uncanny knack of, and this is what somebody said in here the other day, wasn't it? Someone said, this looks cheap. It's not cheap, it's collapsing. There's a big difference between something looking cheap and something that is a steam train coming towards you and you're holding out your hand going, no, you can't come through here. He's doing 180 miles an hour. He's coming through here. Doesn't matter what your thoughts are. What you've got to do is get in and now manage this. If this goes down to here, I'll take another position and manage it, and I'll get out when it moves up a bit. Or it's going to go up to there and I'm going to catch a lucky 120, 150 ADR hit into propulsion and resistance, and I'll get out with a little bit of money. But the act of hitting that button should not affect you in any way. The fact that this goes down to here should not affect you in any way. If it does, you're over leveraged. See, I can close that out now. Do I care about losing whatever I lost? $6. I don't know what it was. Doesn't matter, does it? $7.80. Any one of these trades moves 3 pips and I've made that $7.80 back. Doesn't matter. That's the bit that the analysis part is why people get worried. Like, I don't know. You decide. I can tell you what is going to happen. You know what's going to happen. If you've been in it long enough, it's going to go up or it's going to go down and it's going to move through time. That's all I know. I have an inkling that this US dollar move is going to continue. But I don't know if it's going to continue from here or it's going to continue from there. I might be totally wrong and it might not continue. But I've got to have a bias. And that's why I use all of this stuff on here to help me make those decisions. I've no idea if they're right or wrong at any time. Retail can be right, you know, all this sentiment stuff. COP can be wrong for a month on a trot. Retail can be right for 2 weeks. If that's the case, I'm going to be wrong for 2 weeks, aren't I? But I know that if I'm wrong for 2 weeks, there's a high probability at some point it's going to do that, because if these guys are all right to get out of their positions, they've got to go the other way, haven't they? And that's when I do my move. I really wish I had a magic wand and a crystal ball, but I don't. DAX short is just starting to play out. So we didn't invalidate the high. We have just broken the low. So market structure, if you put this on a 5-minute chart, we haven't got a structure break to the upside yet because of the size of that move, but that would be that's really bad drawing, isn't it? M pattern reversal. The close of that candle in 1 minute confirms that as a short. Again, how far it's going to go, no idea. It might go down to here and then go up to there. You know, that's what I mean. You don't know. You get in, you take your money, you get out. Pound New Zealand's just bouncing. So I've got a bit more profit I can take off of that. I should get out of that really, at Pound New Zealand, but because it's likely to pull back. Either to there or there, if it's going to continue down. Well, there's not enough money there. Gold is still not moving. So London session for gold is literally not gone anywhere. All we've done is little push back to the midline, taking out the Asian high. So still bullish. Well, sort of. It's not actually, is it? It's undecided. So right, that's all I've got for you this morning. I'm going to carry on with this DAX short. I'm going to see what happens. Basically, if we can pull back up into there and sort of do that sort of thing, I might add another one on with a view to dropping on this. But if you look at the DAX and where we're potentially going today, the only target I'm interested in is low at the session at the moment, because that's yesterday's low, and that's where we stopped the move, yesterday's low. So I can't really see us getting much further than that today. The opening range breakout EA stopped trading, so my pending orders are cancelled off. Oops. So that's where I stopped trading there. So that's all I'm going to trade really on the DAX, and see if we can get back down to these lows. But it's not particularly fast, is it? So probably won't do an awful lot. Right, I'll leave it there. Anything else you need, let me know. I'll be in the Telegram group. I'll be back at 2:20 for the New York session. We'll trade the NASDAQ or the Dow or both. I don't know. I'm really tempted to have a go on the Dow, but I'll see where we are this afternoon and see what the levels are like. I might manually trade. What I might do this afternoon is have the opening range breakout EA trade the NASDAQ for me, and I might manually trade the Dow Jones. Similar strategy, but obviously trade it without the ORB EA. See how we get on. Okay, so yeah, anything else you need, let me know. Otherwise, I'll be back at 2:20. I will see you then. And yeah, see see if we can bank some more money. All right, have a good one. I hope it's profitable, and I'll see you later.